Hey guys, welcome back to the Independent Investor channel. I'm going to talk about 5 myths in investing, and I'm going to dispose of all of them in this video. These are all 5 things that everybody's heard of, and that all too often we buy into them as true. And I thought I would discuss each one of them and kind of dispel or give you my thoughts on each one of them on how really it can kind of send somebody along the wrong track if you buy into these. All right, guys, if it's your first time tuning into the Independent Investor channel, I highly encourage you guys to subscribe to the channel. We're going to get right into it, guys, and kind of talk about my top 5 myths. Number 1, I hear this all the time when I'm talking to new investors out there, and they come to me and they're like, it's the first thing that they want to say is, I'm new to the stock market. I don't know anything about the stock market. And they'll throw out a couple questions and then they'll apologize for asking the questions, guys. And the first myth that I want to talk about is that you have to be an expert to be successful in the stock market, okay? That is completely false, all right? There are experts in the stock market that get it wrong all the time, all right? They do. Now, so you guys as just regular people, okay, me as a regular person, how the hell can we win in this environment, right? If an expert is what you're saying, Ryan, can't make it all too often, right? How is a normal person supposed to deploy some tactics that are going to work for you? And the idea is that you keep it simple. You keep it simple, right? You guys need to understand that everything that you can do on your side, you can validate and justify very, very easily on yourself. And it doesn't take you to be an expert to understand why we invest in the account that we do. We all understand the importance of keeping our money protected from the government, right, in the form of tax protection. We all can kind of resonate and perk up with the idea of eliminating or reducing the fees that we all know exist in our retirement account. A lot of people just don't understand how. And I think a lot of people get caught up in the, I'm not an expert, so therefore I need to seek out an expert to seek my representation to the stock market. And those are the false validations that we go through, and they couldn't be further from the truth, guys. It's not worth selling the farm, right, to just give away the farm, right, for you guys to pay what you think is an expert to provide some sort of strategic advantage. It's just not possible. And there's products out there nowadays that you can actually invest in, and they will work for you, okay? There's no level of expertise or tinkering or short selling within that account that need to occur at all, right? You just need to passively invest in these assets and let them grow for you with the compounding effect year over year. So number 1 is to be an expert is something that is just not required, and it's not something that I advocate on this channel. Number 2 is the misconception that you need to seek representation to be successful in the stock market. Somehow, people think that by going in and sitting down with somebody who is a lot better dressed than you are, all right, who's wearing a suit and tie and is paid to do that, by the way, who puts an oak desk in front of you and a really nice fake plant in the corner, all right, and puts a few pictures of stock market, stock market news on the wall, can maybe have some swag to pass out to you. I don't know, maybe a rubber piggy or something, or a pen or a pencil that they can give you. But it's somehow those false validations that we go through to think that somehow by sitting down with that financial planner every 6 months or every year, every 6 months if you're lucky, by the way, provides you any type of strategic advantage, okay? And I'm sorry about the misconception that is pushed through the airwaves. And they go through great lengths to show that they'll sit down with your children and they'll elegantly articulate and just be up to speed on all the changes throughout your life. And somehow that those changes need to be acted upon. And somehow we can massage our financial plan to somehow justify the fees that they're paying you, okay? And the big myth is that the fees that you pay justify the services that are being provided. And that's just not true, all right? The news media and the mainstream media will have you believe that you can just go in and seek that representation with any number of people who are competing for your business, make no mistake about it, And the idea that you need to seek representation from any one of these entities is just false. You don't need to. You'd be rest assured to just start yourself on a self-directed program, plagiarize the plan that they've built for you, and just put it to work in a self-directed account, guys. You will be so much better off by just putting it into a self-directed account. If you don't believe me, okay? If you don't believe me, at least heed this advice. Take the plan that they build for you and put it to work point for point in a self-directed account, okay? That way, the money that was going to be paid over here in fees is going to be paid to you as an individual. That's myth number 2. Number 3, I hear this all the time. Investing is like gambling, okay? This could not be further from the truth, okay? So allow me to retort, all right? Investing is not like gambling, okay? If you take your hard-earned dollars and you put them into a stock, stocks that I recommend, especially a blue chip dividend payer, okay? That dividend payout is guaranteed, okay? Every quarter, quarter over quarter, year over year, that dividend in these good companies that I recommend, Johnson & Johnson, Procter & Gamble, Wells, these companies that have traditionally paid and increased their dividend to pay back shareholders as being a participant in the appreciation of the company is guaranteed, all right? You get nothing of the sort when you gamble, all right? Now, when you go in and you gamble, you have a chance of winning 100% and you have a chance of losing 100%, all right? Now, when you invest in the stock market, you are very rarely ever going to incur, especially if you invest diversified and invest in blue chip stocks, of losing everything. Now, what I mean by that is if you end up investing in a good blue chip company, let's say Johnson & Johnson. Johnson & Johnson's been around for 100 years. The chances of Johnson & Johnson going out of business tomorrow is very, very unlikely, okay? Now, the chances of Johnson & Johnson going down in the stock market, there's a 50-50 chance, let's say, that Johnson & Johnson goes down a couple bucks tomorrow, all right? Now, the difference between investing and gambling is that the Johnson & Johnson, when it goes down, you have options, all right, to hold the stock. You can sell at a loss. That's your option, and that's your prerogative. But you could actually buy more if the stock goes down, right? And you can continue to hold the stock if it goes up. You have no such luxury with gambling. You're either going to win 100% of your money or you're going to incur a catastrophic loss of 100% of your money in most cases, all right? The two have nothing to do with each other, and I really want to dispel that myth that gambling is like investing, because it is absolutely not. Now, number 4, timing the market. So many people hit me up with this question. You recommend VOO all the time and VTI. Is now a good time to buy VTI or VOO? The answer to that is yes. You can buy the ETFs at any time. I don't really care so much that the market is down or the market is up or volatility is up or volatility is down. Any time is a good time to strategically scale money into the market, okay? Now, it comes with it with some level of discretion. If you guys are coming to me and you're talking about introducing $500,000 to this market at a record high, and it's been at a record high now for the last a year or so, I'm gonna tell you to scale those dollars into the market. But if you're hitting me up with this question and saying, is now a good time to enter into the VTI, and you're looking at, you know, $1,000 or $5,000 or $10,000 of investment capital, guys, my answer to you is always going to be yes, it is time to invest. Because every day that you sit on the sideline and are a non-investor, you are hampering your ability to become an investor and enjoy the accumulation going forward, all right? So timing the market is not something that's even possible. It's a myth that you can somehow strategically time the market and buy on the dips, and you can somehow sell on the highs and somehow play this teeter-totter game to somehow accelerate yourself into retirement. That's not going to happen. All right, you're going to end up missing on the downturns and you're going to end up missing on the upturns. And together, that can actually be very, very damaging to any portfolio. And the last thing I want to talk about, number 5 on my top 5 myths to dispel in investing, is that investing is for the rich. This couldn't be further from the truth. I will turn that around and I will say investing is actually for the poor. It's for the working class. It is tailor-made for the working class. Quite frankly, there is a ton of very, very smart, skilled people in this country who would just as soon participate in the great pieces that make up this country, and the stock market is one of them. If you can just participate in a degree of allocation that makes sense for you guys, investing is going to mean so much more for you guys than it ever will for the rich. Because I can tell you, the rich folks, they're not self-directing their accounts. They're not doing any of this. They're turning over lump sums of wealth over to hedge fund managers so they can somehow feel special about themselves that the hedge fund managers are taking and losing their monies all the time because they don't care, all right? It means more to the working class people. The investing is for the poor people that I talk about, and the impact is going to be so much more because those people know how to appreciate the value of a hard-earned dollar. And I'm rest assured here to tell you that if you follow my program of putting yourself in charge of your own dollars going forward, guys, you're going to get the maximum benefit out of those hard-earned dollars. Guys, thank you so much for tuning in to this top 5 myths that I'd love to dispel in the stock market. So many times when people are approaching the stock market, they buy into these myths as truths. And you guys would be amazed at how much more simple the truth actually is in investing, and it's so much easier than people give it credit for. Guys, if it's your first time tuning into the channel, I highly encourage you to subscribe to the channel. Leave your comments below on this video for others to view. We'll start a community discussion on other myths that you've heard in investing. Drop those in the comments, guys. I try my hardest to respond to all of my viewers on the channel, guys. Share this video with anybody out there that you know that's looking to get started in the stock market. This can be invaluable information, guys, to get in the hands of our young people or anybody out there who doesn't have a lot of experience or no experience in the stock market and is looking to get involved, but not only looking to get involved, but get involved the correct manner. Guys, thank you so much for tuning in, and good luck in your investment future.